All right, well, welcome to today's webinar. I am Beth Overmo. I'm the Strategic Plan Coordinator for the State Bar of South Dakota. And before we get started, I'd like to go over a few items so you know how to participate in today's program. First of all, do you or a lawyer, law student you know have a drug or alcohol problem or are struggling with depression or anxiety? Lawyers Concern for Lawyers is a confidential and independent resource for South Dakota lawyers, law students, and their families. Your referral or visit with LCL is strictly confidential and privileged. Call Becky Porter for more information at 605-391-5191. Becky is an LCL member and your communications with her are likewise confidential and privileged. And today's webinar will last approximately 1 hour. We ask that you turn off your cameras and remain on mute during today's program to avoid any unnecessary background noise. You will have the opportunity to submit text questions to today's presenter by typing your questions into the chat feature. You may send in your questions at any time during the presentation, and we will collect them and address them during the Q&A session at the end of today's presentation. Thank you to the State Bar of South Dakota for their support of today's program, and now I would like to introduce our presenters. Elizabeth is the owner of Elizabeth Rosenbaum PC of Sioux City, Iowa. She graduated from the University of South Dakota School of Law in 1988. She has devoted the past 30 plus years to the practice of family law in South Dakota and Iowa. Elizabeth is a fellow of the American Academy of Matrimonial Attorneys. Although her law office is in Iowa, Elizabeth's home and heart is in South Dakota, along the banks of the Missouri River. And Mike is a shareholder in VRSPC, a certified public accounting and consulting firm in Watertown and Brookings. He received his BS in accounting, Masters of Professional Accountancy, and JD all from USD. He obtained his certified valuation analyst designation in 2011, but switched to the accredited in business valuation certification through the AICPA in 2017. While he does not actively practice law anymore, he makes good use of his law degree while helping lawyers with all types of disputes involving business value, damages, and reorganizations. And with that, here is Mike, and here is Elizabeth for today's presentation.
Well, thank you for that introduction. I'm going to try and get us started with this next slide by pointing out the issue that we're covering today is one in which we're going to give you a hypothetical set of facts, and we're trying to work through the valuation of a family-owned trucking company, and also to look at the owner's income for divorce purposes in the state of South Dakota. As you kind of glean from the introduction, it took me a good 5 years to get a master's in accountancy. It took me a CPA exam, weeks worth of studying and preparation to take the valuation credentialing exam. So I can't really teach you absolutely everything I know in 1 hour's time, but the hope is that as we talk through these issues here today over the next hour, you'll have a better understanding of the valuation issues as you deal with divorce clients where they own a business. So with that, Beth is going to get us started on the fact pattern that we deal with today.
Thank you, Mike. And thank you, Elizabeth, for the nice introduction. As she said, I'm an attorney in the American Academy of Matrimonial Lawyers. I practice between Sioux Falls and Des Moines and up to the Iowa Great Lakes. We tend to do more complicated cases at our office. And Mike and I thought it would be a really good idea to just go through a typical example of if someone comes into your office, how to assess should you hire an expert or not, and what kind of things you would do while working with an expert. So we wrote this to be a real general overview of a simple case from Howard, South Dakota. So with that, and these are made up facts, by the way, but we're going to go through them. So on page 1 of the facts, Judy and Bob were married in 1992 at age 20. The couple lives with their 16-year-old boy in rural Howard, Minor County, South Dakota. Judy's a full-time homemaker with a high school diploma. Judy does have the early stages of multiple sclerosis. Bob is also a high school graduate. He works as a truck driver, co-owner of a trucking company with his father that is called Golden Pheasant Lines, and the owner of his own trucking company, which he calls Coyote Trucking. Bob is healthy. They live on an acreage with several large Morton buildings. The acreage is on land owned by Bob's family for 4 generations. So this is something they would call a heritage farm. The trucks are stored, maintained, and dispatched from the biggest Morton building right on the acreage. One of the smaller buildings has an office where all the bookkeeping and dispatching occurs.
The business has a part-time bookkeeper named Candy, and she works on the books approximately 3 times per week in the office. And that's the same office that Bob does all the dispatching from. And Judy just found out that Candy was working on more than the books when she came to the office. So she's devastated and comes to your office to file for divorce. And as is typically the case, Judy really has no idea what the trucking enterprises or any of the equipment is worth. She's not even sure how those businesses are held. She tells you that the boy loves both parents and will not want to live with one or the other. But Judy will need a place to live. She's going to need alimony and child support. Luckily, Judy was able to dig around in the office one night and found a copy of the 2019 Golden Pheasant tax return, which is an S-Corp tax return, and also grabbed their personal tax return, which indicates that Coyote Trucking is an LLC, reported on Schedule C as a disregarded tax entity.
Now that you have those general facts, you, the attorney, are faced with what steps should I take at this point? We've got this woman here who's very distraught, finding about Candy, the bookkeeper, has all these years invested in the marriage, and knows that her living on the farm place is not going to work out from this point forward. So what steps should you take? The first thing that you want to do is to set up an intake interview with her. We typically have the client bring certain number of documents based on the initial facts that we get. Of course, you always want to do a conflict check first. And it's amazing. South Dakota is very big, but sometimes it's very small. So that conflict check is critical to make sure that no one in your office has worked with Bob or Bob's father or the trucking companies before, or Candy for that matter. You want to have her bring in what she can find as far as tax returns, bank account statements, any loans or debts, and any financial statements submitted to the bank within the last 3 years. Those can end up being critical because typically both spouses sign off on those when they're submitted to the bank for a line of credit. So those can be very, very helpful. So we set up an intake appointment. Then we have Candy actually come in. And one thing I've learned over the
Candy
years.
come in.
I'm sorry. No, we don't want
We don't want
Candy
her
to
in
come
our
in.
office.
You're right. We want Judy. Thank
We
you.
want Judy in our office.
When Judy comes in, you want to be the one doing the interview. I have seen time and time again when a law firm has had a legal assistant or a paralegal do the initial interview, that they miss something very important. I personally prefer as an attorney to always do the initial interview myself. So you can look them in the eye, you know, you can judge, is she being honest with me or not? You can get a good feel for her physical issues with her MS. Is she using a walker yet? Are her hands shaky? It's just good for you, the attorney, to do this yourself, I feel. So detail, detail, detail. before you even begin talking about money, you should get a very detailed summary from wife, from Judy. We find out that she's 50 years old. We find out that she only has a high school education. For her work history, when you visit with her, she's had a few part-time work situations in Howard, and she had one in Madison at the Pomida before Pomida closed. In Howard, she was at the drugstore before that closed, but just part-time and for short periods of time. Her main focus was to be the homemaker, raising their boy, doing all the cleaning and cooking and laundry, maintaining the household, paying the bills.
And can I point out here, Elizabeth, that it's not uncommon in these situations where if you're dealing with a non-owner spouse, a lot of times they will tell you that they have spent substantial hours even helping in the business itself without ever having received a W-2 or any kind of reportable compensation. And that's going to become a big issue down the road too.
Yes, so it's very important to ask about her involvement in the business and find out what, if any, work she has done with this business. And as we know from those initial facts, she hasn't done a whole lot in this scenario, but oftentimes some of the recent cases we've had, the spouse is paying all the accounts payable, actually working with payroll, turning in fuel, tax reports, turning in all the information to the CPA. So some of our younger couples, they're more involved. Some of the older couples, and 50 is not old by any means, but some of them, they're just not involved at all. And that's where we're starting out with Judy here. We want to ask her about, in detail, her health. And we're going to find out that Judy is doctoring with Mayo Clinic and some specialists in Sioux Falls because she's in the early stages of MS, is on some pretty heavy medication. We want to learn about that. And she tells us that she went to the doctor and just got put on some anxiety medication too, because she just found out her whole life, her 30-year marriage to Bob is about to end. So she's pretty stressed out, understandably so. It's also very important to ask if Judy has any military background, which she does not in this case. Then continuing on in your intake, you want to get information about Bob also. And we find out that Bob is the same age. They were high school sweethearts. Bob got just a 1-year degree at a tech school for some diesel technology. His work history has been trucking with his father, and that's been it. That is his dream, that's his goal, that's his retirement plan. We find out that Bob is in good health. He's not on any medication that she knows of, and he has no military background. The next piece is about the child. And this is a piece that I see glossed over quite often by attorneys. And I'm so surprised when we get to time of trial or time of mediation that the other attorney doesn't know that a child has special needs. So it's very important to always ask about that. And special needs can be developmental, educational, physical, and even ADD, ADHD. Those are all important things to know if that child's on meds, if the child has any dietary restraints, if the child carries an EpiPen, has severe asthma, any of those types of things. So we find out that this boy, as we said in the initial facts, he's 16. He goes to school right in Howard. Excellent principal there. Shout out to Travis S. Leeson in Howard, South Dakota. And we find out that he wants to go to college and he wants to be a veterinarian. So we've got a smart boy. He loves both his mom and dad. When you ask her straight up, what's a 16-year-old? How bonded is he to you, and how bonded is he to mom and to dad? You find out that he's basically equally bonded. A mother tells you that I don't want to fight or take him away from his father, and his father wouldn't do that to me. Because he's 16 and he can drive anyway, he'll do what he wants anyway. So right away, as the attorney, this is probably going to be some sort of joint physical care situation. Continuing on with the assets then, it's important that you have an intake sheet so you can keep track of these in an orderly manner. So typically we always start out with the real estate first. And in this case, you find out about their acreage, that they've got a nice 10-acre piece that has the home place on it and all these Morton buildings. You find out that he's got a little bit of livestock out on a pasture. He's not really a farmer, it's more of a hobby farm, but the boy is interested in FFA and 4-H, so he shows cattle. So they raise some cattle out there. And that they've got a cabin on Lake Madison. So you establish the real estate, then you ask her about the vehicles, and in this case, Judy knew, that she drove her vehicle and that he drives a big pickup truck, but she wasn't sure who owned that pickup truck, if it was a company or her. And then she said, and there's all sorts of semis out there, tractors and trailers. Ask her about the bank accounts, savings and checking that she knows of. Judy knows very well into a dime about their personal accounts, but not much about the business. She knows he's got some business accounts at the same bank. You want to ask her about retirement accounts. And Judy tells you, he's always told me from high school that our retirement's going to be this trucking business, that's going to be our business. So there's no need for us to invest in IRAs or 401ks. And she said also, because I've been a homemaker, my contributions to Social Security have been very, very few, just when I worked at the drugstore in Howard and at the Pomida in Madison. And then you want to ask her about all the personal property, any collectibles, anything worth any value, hunting equipment, guns, bows, boating equipment, collections that they might have, and you find out information about that too. And they actually have quite a bit of personal property. They've got a few quad runners, things that you typically might see out on an acreage, and they have a very nicely furnished home. And they've got some coins that they've collected and some nice prints that have been framed. Next, it's your duty to inquire about the business, find out how much you can. And Judy says, I don't know if this is a corporation or if it's a partnership with his dad. Ask her about that. She does hand you the personal tax return from 2019. And when you go through that, you see that his trucking company, Coyote Trucking, is listed as an LLC on their personal return, so that you can figure out. And she also hands you a golden pheasant corporate return. And you dig in there a little bit and take your first cursory look at that. And you see that it's a 50-50 ownership with father. So those are some initial business questions that you ask Otherwise, in this scenario, Judy doesn't know much more. She tells us the shop is a stone's throw from the house, that there's trucks going in and out all day and all night. A lot depends on the price of grain and the cattles and hogs. You find out that he's hauling for several local elevators and a local dairy in the area. And he's very, very busy dispatching all the time. It's a very, very, she thinks, profitable business. Next, you want to ask her, was this business purchased by Bob, or did he start it? You know, how did he get it? And what she knows, what Judy tells you, is that she thinks that he just kind of started working in it after graduation from high school, but she's not quite sure. You ask her about how many employees she thinks are out there, and she says, well, for sure we've got 3 or 4 full-time guys, and then we have part-time add-ons during the real busy season. But she said, I think there's some new ones, and one just quit and moved to Missouri, so she's really not sure. You want to make some initial inquiry about the perks or benefits that she's aware that Bob and or her get. And she says, I think that the business pays for his Ford F-150. I know that we run our insurance through the business. I know that we run our phones through the business. And we've got a gas card at the Cenex that we can just use whenever in town, and the company will pay for that. When you ask her how many trailers and trucks are out there, you know, she can give you an estimate, but she's not really sure. And she thinks he just traded one in for a nice new one per the CPA's advice, to try to spend on some money at the end of the year. Another interesting factor coming into our cases this year, of course, is the effect of COVID-19. I've had some divorce cases that COVID-19 has just completely destroyed the business. I've had other businesses that COVID-19 has actually been very good to. So it is very important that you talk about that. And one of the things we know is that we don't know when it's going to end or how long the effects are going to be out there, but it certainly has had some effects that you need to ask about. Do you know how this has affected things? Then when you're doing your initial assessment with her, you also need to figure out what kind of debt is out there. And hopefully she has a pretty good handle on the personal debt, which she does. She brings in several charge card statements, in a bank loan that they have, and payments on her vehicle. She said, I know there's some big loans out there, but I think they're running those through the corporation to purchase his trucks. And I think he got a small business loan from the government during COVID to help out, but I'm not sure how much. That was all done with his CPA, and I never saw the money. It went through the corporate account. So you get kind of a vague idea about the debts from Judy. Another very important question you want to ask Judy is, was there a prenuptial agreement? And she says, oh no, we had nothing when we got married. We were, you know, high school sweethearts, and we got married very young. So no, we do not. Why is that important? Because if there was a prenuptial agreement, you need to look at that right away to see what the effect will be on this marriage, to see if it's even valid or enforceable. So I come to my conclusion of my initial meeting with her, and this one took a little bit longer because of the complexity of it, and my client was very weepy. My client told me she didn't feel good, so she had to take a few breaks. It was clear at the end of my interview with Judy that how am I ever going to value Bob's income? You know, the business tax return shows a gross income, but how do I know what his income was? How do I know, how am I ever going to value both of these businesses to make sure that she gets her fair share as a spouse getting divorced? I'm concerned about her age. She's not old by any means, but she's 50, so nearing retirement age. I'm worried about her health with the pending MS complications. And I'm worried about Judy's retirement because she told me she's hardly put anything into Social Security. So I know at the end of this meeting, after a thorough intake, I've got some issues and I've got some problems, and I'm probably going to need help.
So now you're asking yourself, do you need to hire an expert or not? And of course, the valuation guy is going to say, if a business is involved, the answer is almost always yes. Relative to the value of a business, you know, I frequently get asked by attorneys if they can, you know, get the quick and dirty, so to speak. They only want to pay for an hour of my time to pull out a rule of thumb book. To which I will tell you, you can certainly buy a rule of thumb book, but be careful and proceed at your own risk, because those rule of thumb books can be a valuable tool to someone that really understands valuation theory, because there's still potential adjustments that need to get made. It's a great resource, but it can't be the end all be all. So just be cognizant that I fully support you purchasing one of those books if you want to be able to peek at rules of thumb. But the moment you start convincing yourself that the rule of thumb is just an open the book, take a number times 2 or 2.5, and then you're done, just make sure your malpractice insurance is up to date.
I'm going to agree with Mike on that completely too. I think it is malpractice if you get a case like this in your door and you think you can just buy a rule of thumb book and value, whether it's a trucking business or a restaurant. There's all sorts of regional differences, all sorts of things to consider, which we'll talk about more. But if you get something complex like this, even if you pay an expert an hour for a consult to get their opinion, you need to do that.
And the prime example is that a lot of multiples in a rule of thumb book are going to be a multiple of EBITDA. Now, I firmly believe that every one of the attorneys on this this webinar will be able to calculate EBITDA, but it really is more of an economic EBITDA, not what the books say, because it is very common for our business owners to try and save as much tax as possible. So back to the fact pattern, we know that they're running their cell phone through the business. They're running 100% of his Ford F-150 through the business. Those are all things that I'm potentially adjusting before I even arrive at EBITDA in order to apply a multiple. So again, good resource.
Mike, for those of us that aren't CPAs, what does EBITDA mean?
EBITDA, earnings before interest, taxes, depreciation, and amortization. The court reporters always yell at me for that one too. But if you can go to the next slide, Mila. So on that initial call, just be ready that the expert's going to request the name of all parties, name of all businesses and attorneys to go do a conflicts check. I certainly want to hear the initial story that the attorney has collected from the client, but just know that I'm not going to necessarily have any opinions or firm commitments just yet. And you know, a prime example is that when Beth calls me and tells me that she talked to her client and the client said the business is paying for 100% of our cell phone, it's paying the car payment for his Ford F-150, and you know, the business even paid for us to go to Jamaica last year. I always caution attorneys, say, just know that until we actually gather the detailed information, we don't know that those are add back items, because a prudent accountant may have already coded those things to a distribution account rather than an expense account. So I really try on that initial call to make everybody take a step back and say, we need to gather a lot more information before we know where this thing is really headed. On that initial call, I always explain the different levels of engagement that a valuation expert can do. There is a calculation engagement, and that type of engagement is where we decide ahead of time what valuation approaches we're going to use, what steps we are going to take, and what steps we aren't going to take. And that is in comparison to a through valuation engagement that results in a conclusion of value. And that really is, that's the full-blown valuation. That is where I have complete unfettered control over forming my own opinion, going through every single one of the developmental standards. All too often, I think clients try to push valuation experts and attorneys into using a calculation engagement because they are cheaper. And while I will admit that they do have some evidentiary value, it's a huge risk walking into court and basically having to admit to the judge that you agreed exactly what your calculation was going to be before you ever started the job. And I'll tell you that every time I have testified in a case where the opposition had a calculation engagement, I made sure to educate my attorney on how to go in and cross-examine that expert and get them to basically have to admit on the stand, yes, we agreed what calculations we were going to do before we ever started. I didn't get to choose between all the different methodologies that exist. So it can be really problematic if your client's asking you to save money by using that calculation engagement. I always explain to the attorney that my preference personally is to engage directly with the attorney as a consulting expert with the possibility of becoming a testifying expert. Now, I personally have always done it that way for purposes of maintaining as much confidentiality on the early stages of the engagement, because I truly do want to maintain my status as an objective expert. And there have been times where I have to call the attorney that hired me and tell them, you know what, the business isn't worth as much as your client thinks it is, or vice versa. And really at that point, we're really steering towards the best way to maybe mediate a case, because you don't want to put me on the stand and you don't want me to be a testifying expert anymore. I always talk about how fees will be handled. I need to know whether the attorney is going to collect into their trust account and then pay me out of the retainer, or if they want me to handle fees directly with the client. And then I kind of verbally tell the attorney what to expect from my initial request of documents and questions, just to give them a heads up and maybe be able to get started if they're on kind of a short time crunch. If I determine that there are no conflicts, I'm going to get the engagement letter put together and sent over to the attorney, along with what I call a prepared by client list, or it's a punch list basically of all the initial documents and requests that I have. I'm always going to ask for a minimum of 5 years of tax returns, and that's business and personal. And every case is going to be a little different, but in this hypothetical fact pattern we're dealing with, that's going to mean 5 years of that S Corp return where he's a 50-50 owner with his father, and make sure I have 5 years of the personal that reports the Schedule C disregarded LLC entity. I want the most recent depreciation schedule, and that's always an important piece. But just to kind of bring it to this hypothetical fact pattern, if you've ever worked with any clients that have trucking companies, you know, they're putting hundreds of thousands of miles on these tractor trailers, and they're either going to be replacing them at a much faster rate than you would ever realize, or they're doing major overhauls. Those major overhauls are going to end up on the depreciation schedule. So me getting my hands on that depreciation schedule starts telling me the story of how new the rigs are, or when the last time was that they went through an overhaul. So I have a better idea of the life expectancy of the tractors that are on the depreciation schedule. I will always ask for QuickBooks backup or direct access to QuickBooks Online if they use QuickBooks. All too often, we start saying financial statements, and when you put that ownership into the opposition's hands, they're going to send you hundreds of pages of documents in paper format, and it's typically not run the way I want to see them. So I'm always going to ask my attorney to do what they can to give me direct access to the QuickBooks file if they're using QuickBooks. That'll allow me to drill into the underlying details so that when our client is telling us they pay for our cell phone bill, I can go find in the books where that cell phone bill is paid and find out if it's coded 100% to expense, 100% to distribution, or is it being split? Because I possibly need to make an adjustment if 100% is being expensed. I'll tell you that typically when I ask, I've been able to get it. I'm always asking for documentation of any prior sales. Now, the initial story was that he basically started the business from scratch. He really didn't have to buy into anything. So in this particular fact pattern, the answer may be that there have been no prior transactions with the subject companies. And I'm always going to ask for the financial statements that were given to the bank pre-divorce getting filed. We all know that the numbers that get plugged in on that balance sheet, personal financial statement that goes to the bank, those numbers change really quickly once divorce is filed. So I like to see what people were trying to tell the bank the business was worth before they were getting divorced, but also just the full list of assets. It's a good place to start to make sure that you're not forgetting or missing any of the assets or liabilities associated with the client. And then I'm always asking for any prior valuations that were done. You know, sometimes business valuations get done even when there's not a sale. You know, I do business valuations for SBA loans. Maybe this client got an SBA loan when they expanded the trucking company, and a valuation had to get done for that purpose. Now, is that valuation going to be controlling? No, but it will certainly give me a lot of information and help me kind of fast forward through a couple of the initial steps in the analysis.
Mike, I wanted to ask you, is it helpful for you to get a release so that you can speak directly with the CPA that prepares the tax returns for these trucking companies?
Absolutely. If we believe that the CPA has the information and is going to be someone who is willing to talk with me directly, I'm more than happy to talk directly with the CPA. And one other piece, if you can go back, I didn't put it on this slide, but it probably belongs here. Be cognizant of situations where we possibly need an asset appraisal. You know, every valuation is going to be looking at an income approach, a market approach, and an asset approach. And for most operating businesses, that asset approach is really the base for the floor, saying you're clearly not going to sell the business for less than the sum of the hard assets that it owns. And so usually once I get through my initial analysis, if it's a good, profitable business, I know that the asset approach is not very important in my fact pattern because it's really going to be driven by the income approach or the market approach. However, when you think back to our fact pattern, we told you that this business was being run out of a Morton building that may or may not be actually truly rented out at fair market value to the operating business. So I'm going to have to make some decisions on whether that Morton building is really considered a business asset, or is it really a non-operating asset? It's just separate real estate that we need to know whether or not it's being rented out at fair market value. So I may be requesting that we get that Morton building appraised separately.
So at this point then, Mike has sent me his punch list, and it's my job to get my shovel and figure out what we have to work with. So I do that as an attorney in several ways. I send interrogatories. I send requests for production. I also talk to my client about getting appraisals. And most of the Experts I work with right away want to have appraisals done on the real estate, which is logical. You do not ever want to just rely on the assessed value on your county's website because usually it's low and acreages are going through the roof right now. So you want to get an assessed or an appraisal. Typically, I will call the other attorney and see if we can do one jointly to save some money. Sometimes we can get that done, sometimes we can't. Another thing I recommend to the client, especially if they have very nice household and collections and such, is that we get an appraiser to do the household. To go in and quickly for maybe $250, get us a value on everything in the home and out in the garage. Then they can walk to the Morton building and start looking at all the shop tools. I typically hear, oh, those tools are worth nothing, or, those barrels are worth nothing. Well, if they're full of oil and full of supplies, or if there's a stack of backup tires there, have you bought a semi tire lately? It's worth a lot of money. So it's good to have an appraisal done of the personal property. Again, you're looking at a 50-year-old with multiple sclerosis that will have to move off of the home place and that has no social security or very little contributions. So you need to find out what's out there. If the parties will not comply with discovery, then you need to file a motion to compel. You need to be aggressive in your discovery in a polite and civil manner, of course, but there's no reason to not pursue discovery in a divorce case like you would in any other civil matter.
And Beth, I'd like to point out, you made a really good point on when you're looking at valuing personal property, that all of a sudden you find out there's a whole bunch of tractor trailer replacement tires. Chances are that those got expensed out when they were paid for. So they're not sitting on any balance sheet. So when I'm sitting in my office in Watertown, South Dakota, and I get QuickBook files, I'm not going to see that or know that. Now, will I discover it on my site visit? Yes. But if we're already sending someone out to look for values on personal property, we should be cognizant of the business related items while they're going out there, so that we can, while they may not necessarily end up on the personal side of your spreadsheet, you can raise that to my attention to say, hey, there's a whole bunch of replacement tires sitting out there. And there's some real value to them that is not sitting on the balance sheet.
Mike, I see we're running we're running our time, so
Yep.
We'll keep getting through our slides here.
So at this point, Elizabeth has given me as much information as she's collected, and I'm going to start doing my initial analysis. I'm reviewing that info. I'm going to research the industry, the economy. In current times, we're dealing with COVID-19, and that affects every single valuation in some way, shape, or form. I'm going to do an initial analysis using all three approaches: asset, market, income. While I'm going through that initial analysis, I'm going to create kind of my list of additional questions and documents that I believe I'm missing. Usually at this stage, it's things like missing financial statements, or I need greater account details, or I've run across a loan that I don't have enough documentation on, or I see a number plugged in for officer compensation, but I don't know if that's just Bob or is it Bob and his dad. I don't have enough detail, so I want more detail. I usually have a pretty good idea at this point where things are heading. I might even have a general range of values. So could we go to a mediation at this point? Sure, but I'm lacking the fine details or those smoking guns that I really need to arrive at a true final opinion of value. I need more information, and so I'm going to need Beth to do some supplemental discovery at this point.
So Mike calls me and vents his frustration about, although I've done all this discovery, he still has a few more things he wants to know. And I will call the other attorney and say, my expert would like to do a site visit. If they say, no, he can't come out there, which is very rare that I get that reaction, but if they do, I need to file a motion to allow expert to do a site visit, to do an inspection. Don't be worried to file motions in divorce cases. They deserve the same discovery that any civil case would. Get those appraisals done. Mike brought up some good points about doing very thorough discovery. We might find on that financial statement that there's a business charge card that shows $6,000 owed. And I asked my client, are you able to use that? And she says, what? There's a business charge card? And so we get those records. And lo and behold, we find all sorts of expenses for hotels, food, trinkets from Greenberg Jewelry, all sorts of things that my client Judy didn't enjoy, but Candy enjoyed. So I'm seeing a whole new line on our spreadsheet on dissipation of marital assets. So it's amazing what you'll find if you just sit and really carefully view the documents that you get in discovery.
So then once I get some of that additional supplemental discovery, I'm moving into kind of the real detailed part of my phase of the phase 2 of the valuation. After reviewing all those documents, I want to perform my site visit. Now, in cases where both attorneys have agreed to hire me as an independent advisor to the court, and I'm not necessarily hired by one side or the other, I have done site visits with no attorneys present, and I'm fine with doing that. But if you are dealing with a highly contested divorce and you are each hiring your own experts, it is my opinion that the attorney should be present during that site visit, because I've had it happen to me where I start asking questions or asking for documents that the opposition just flat out refuses to answer or flat out refuses to give me for document requests. And I want my attorney present to help apply a little pressure and or to make notes so that they know what to follow up with on their next motion to compel. After that site visit, I'm going to fine tune my analysis to the point where, 50% of the time I may be done now. I may have received everything I needed. I have answers to all my questions, but there are still really complicated cases where even after that site visit, I have those kind of last follow-up, questions or issues that usually have to do with what the future expectations and what the risk factors really are, the fine details. And so I may be putting together a list of the final round of questions that I need the attorney to get answers to. But now, since we're dealing with such fine details, it may require kind of a different avenue for discovery, which is why on this next slide, you'll see we're asking the big question, do we possibly need to schedule a deposition?
This is something that is on a case-by-case basis. You need to talk about the cost value of it with your client. Sometimes these are just critical to fully understand. For instance, if physical care was a disputed issue, I'd want to do a deposition about all the time he's gone in the truck and behind a cab and on I-29. And if you're not getting straight answers about some of the finances, or all of the sudden, all of the assets were put in his father's name and taken out of his name, those are reasons you need to take a deposition. Don't be afraid to take a deposition in a divorce case.
And I'll tell you, COVID-19 has really kind of thrown a different spin on this, because while I would say that historically, there probably haven't been near as many depositions at this kind of phase of my evaluation. More and more, it's kind of becoming the best approach, because at this point in time, I've gathered everything that I think I need to know, other than I'm really trying to now project out into the future and assess the risk of the business being able to obtain those results. And when COVID-19 affected the business negatively during, 2020, the question becomes, how quickly are they going to recover? Some businesses are going to recover within 6 months. Others might take 3 years to recover. And chances are that me just giving my opinion without ever having really dug a little harder or trying to get the business owner to help give us those answers under oath is really going to open up my analysis to, them having another 3 months to bolster their position of saying, well, no, it's going to take us 10 years to recover, or we're never going to recover.
But what's in phase 3, Mike?
So during phase 3, I'm trying to get everything finalized now. And you've asked me to look at his income. So for the income for support purposes, I'm going to look at multiple years. A business owner has ups and downs and ups and downs. We need to look at a larger period of time to really look for some averages. And to my second point here, I'm always looking at CapEx, which is capital expenditures, and the overall growth pattern of the business. As I dig into the Coyote Trucking, that LLC, what I'm likely going to find is that was a decision between father and son to let son try and grow his own little side nest egg. That's his retirement piece. So he went off on his own to really build up a new fleet of trucks. And I find out that he's buying 1 to 2 trucks a year. Well, that's an exponential growth pattern that's not going to last forever. So we really need to think about those possible adjustments to adding back some depreciation or capital expenditures to say, Judge, look, he's not going to have that growth pattern forever. So really we need to make some adjustment on the income. Really need to be paying attention to the type of business entity that we're dealing with. Is it a C Corp that's not hitting his personal tax return, or is it an S Corp where 100% of everything's flowing through? Do they have control over the distribution? So we have arguments on whether 100% of that income should or should not be included in the calculation. Relative to the business valuation itself, I'm going to finalize the report and get it turned over and make sure that it's clear as can be in that report what the standard of value is, what the premise of value is, and what the level of value is. Now, standard of value should be fair market value. There's a little bit of confusion in the valuation world, what South Dakota really applies for a standard of value. Premise should be going concern. That is a pretty clear settled issue. We're supposed to assume the business is going to continue on in operation. And that level of value just depends on whether you're dealing with a marketable or non-marketable interest, and whether it's a majority interest or a minority interest. And if you look at this next slide, just a visual for you. I mean, recognize that there are the different levels of value. And I'm just going to stay talking on the left side in the traditional model, that we have ideas of a control value, that if you're sitting on that level, you need to take a minority interest discount in order to bring it down to a marketable minority interest. You need to take another discount for marketability if you need to move it down to a non-marketable minority interest. So if nothing else, this graph is meant to explain that there's different levels, and the discounts and premiums are meant to move us up and down that chain. So if you go to the next slide, Mila, I always get asked the question, should discounts apply? Well, I'll tell you that I think that the issue is frequently framed incorrectly in our court opinions. I don't necessarily disagree with the outcomes when our Supreme Court says that, we're deferring to the trial court, and, they ultimately can make that decision. But the better question really is whether or not that proposed discount brings you to the proper standard and level of value. So I list out just kind of an example here, how the discount application really depends upon the methodology that's used. If I'm applying an income approach, Beth, and I'm capitalizing cash flow or discounting cash flow, and I'm using a cap rate based upon a build-up model that references back to publicly traded stocks, when I'm done with that first round of calculation, I've landed on a marketable value. because my comparisons in building up that cap rate were marketable interests. So now I'm dealing with this trucking company that's privately held, not traded on the New York Stock Exchange. So yes, I am going to need to apply a discount for lack of marketability to bring it down to the correct level of value. But now consider a market approach. I have gone and looked at public, or not publicly traded, but privately held companies that have sold. I subscribe to a database that used to be called Pratt Stats, but they basically have a record of any private company sales that have happened going back decades. And I try to look at the most recent 5-6 years. But if I apply a multiple based upon private companies that have sold, I am already landing on essentially a non-marketable value because those multiples are based upon non-marketable company sales. Now, arguably, the valuation industry agrees that you may need to still discount that a little bit if your company is less marketable than the pot of companies that you are comparing to. But theoretically, it should be a much smaller discount. So if someone tells you that regardless of the approach that I applied, at the end, I get to just take a 25% marketability discount. In my opinion, that's just flat out wrong. You really need to be paying attention to the methodology that was used to arrive at that first set of numbers, because we need to know where we're at on that standard and level of value.
I realize we're running out of time. I think we'll finish up our presentation, then if the bar will allow us, we can use time after 1 o'clock to answer questions. But based upon the information that we've garnered, and then Mike sends me his stellar report, makes a very confusing thing very simple on about 15 pages. You know, it's obvious Bob is going to be keeping the income generating asset. He's keeping the farm. He's keeping the home. Judy will be getting a substantial settlement, yes. But there's so many things that I have to think about when we go into settlement, and if that fails, when we go into trial. I need to make sure as the attorney, I consider the tax implications to my client so that things that occur are a non-taxable event. I need to think about her retirement, which is basically zero, and how are we going to take care of her? I need to talk to her and have her go visit with the Social Security people about what her options are with them, and as far as claiming his benefits when he retires. I need to think about her MS concerns and her mobility and her future medical needs. I need to think about her support issues and have her create a budget for me. Hopefully by this time, she's been scouting around town a little bit about where she might want to live until their boy finishes high school. And then, of course, somebody's got to pay Mike and somebody's got to pay me. So we have to think about attorney and expert fees too. And obviously, there's an income disparity between our clients. So those are all things to consider. Now, Mike, is there a case in South Dakota that really discusses in great detail some of the things that we've been talking about today?
So on this slide, the Geeson v. Geeson case did have a lot of the same facts that we kind of ran through today relative to a couple of different trucking companies. And this was a case that I was an expert for the wife. It's a great case to read through to hit home a couple of the concepts we talked about today, but I'll tell you that even reading that opinion, you know, there's certain little details that maybe don't get discussed. So if at any point anyone out there wants to understand a little more of the underlying fact pattern that happened and how things unfolded in that case, I'm happy to discuss that as well.
I think that case is important too because it compares a couple different approaches by different experts, and you'll see some of the things we're talking about, what the court liked to see, what the court didn't like so much. So we're at the end of our presentation, and we are available now if there are any questions.
So there are no questions in the chat. And so I'm not sure, Mike and Beth, if you had things that you just wanted to say in order to wrap up, or if there were other questions that you thought of, but we can give folks a moment to put any questions they might have in the chat and allow you an opportunity to close out the program.
I'd like to note that when you get in a case like this, it most often is not just valuing the assets and subtracting the debts. When you get a larger case like this, you need to look at it because it is an income generating asset and it does have more value than just the value of the semis and the tractor trailers. So those are important things to consider and to make sure that Judy is properly given her share of the marital estate.
Right, and I think it's a fairly common misconception that if it's a really small business in a really small town, it's not really worth anything. And I can tell you from my own experience, my own practice, that really small businesses in really small towns still sell for millions of dollars. You know, when I'm not on the litigation side, I help clients in the merger and acquisition world. And you'd be surprised how many millions of dollars get spent buying a business where there's only a population of a couple hundred people, because they have a business that has a niche market. And, you know, when you look at that Geeson case, it was argued that, hey, we're in Madison, or we're in Millbank, South Dakota. How is this business worth that? Well, you dig in enough and you realize that they have access to a great customer list, farmers, Dakota Granite, and they're the exclusive trucker for Dakota Granite. I mean, there's always going to be more than you realize at first blush, and it bears looking into, because you could be dealing with millions of dollars of value and hundreds of thousands of dollars a year worth of income. So I guess that would be my final parting thoughts if no one had any questions.
Well, my closing statement then would be thank you, Mike. And we really want to thank Myla Brown, a third-year law student at the best law school in the nation, USD, Knudsen School of Law. She helped us look really good and made these great slides for us. Thank you to the South Dakota State Bar also.
Hey, Mike.
Yes.
Quick question for you. What was the name of that service that lists private business sales?
The private transactions.
Yeah.
It used to always be called Pratt Stats, and then they changed the name of the database itself. I subscribe through Business Valuation Resources, BVR.
Okay. Thanks.
Yep.
Are there any other questions?
The only other question I can answer is, will a copy of the slides be available on the State Bar website? The answer to that is yes. They are currently posted to the CLE materials tab on the members portal of the website. So you'll be able to find them there. And I just want to say thank you to Mike and Beth. If those in attendance have any additional questions, feel free to contact the State Bar at info@sdbar.net, and we'll get them directed to our presenters. And once you leave today's webinar, you should receive a survey, and we'd appreciate you completing that and filling it out. On behalf of the State Bar, thanks again for joining us, and I hope you all have a good rest of your day.
Hey, just real quick, Matt Roby, just so you know, the rename is now Deal Stats, DEALSTATS, Deal Stats, formerly known as Pratt Stats.
Great, thanks, Mike.
Thanks.
Hi, everybody.
All right, thanks,
Thank
everyone.
you.
Enjoy the rest of your day.
Bye.